Friday, December 30th. Market analysis, Stan Ehrlich. And goodbye 2022. Last trading day of the year. Currently, it's 10:29 California time, so the markets will be closing in only a half an hour, a couple of hours earlier. I'll see you next Tuesday when we have the beginning of 2023. Let's get started. I always start with the spider. The S&P 500 is my go-to major stock market index. We still have this trading range developing for the last 2 full weeks now. And at the moment, prices have just come down and made minor new lows for the day. So far, it's been a fairly quiet day. You've got a little lower than yesterday's lows, but still in the same price range as the last several days. That would be 2 weeks, actually, with only one close below the most of the lows of the last 2 weeks. And that didn't follow through to the downside at all. As a matter of fact, yesterday was the day after that, and it made a minor new high that looked like a bullish breakout. But hey, holiday markets, sometimes a little fickle, slip back down, still in the same trading range. What next? Well, we have a significant support area at this red bar area, 372.25 and a little bit lower down to 370.5. That could and should stop the next downside move if there is one. And I frankly don't expect that. I think the market is going to hold here and start to move right back up again, either in the last half hour of trading, which is starting now, or beginning of next week. I am looking for a minor upside breakout, closing above 385, and then finishing the closure of an old gap around 387.5 toward 388, and a move back up to approximately 393. Now, there is a small gap to close at 395.5, so that's not out of the question. Bottom line, a modest, decent, nothing special, 10 to 15 point rally next week, maybe even going into the week after. Remember, next week's only 4 days. And we'll see what happens after that. So I vote for a short-term rally. There's a chance that the lows that we are dealing with right now in this last 2 weeks period could be, and this is very premature, a shoulder low on a giant head and shoulder bottom, which would be extremely bullish, long-term, an investor type of bullish pattern, let alone short-term trading, swing trading, scalping, and so on. But my calculations point to the very early part of February for this kind of thing to happen. The prices are about right, maybe a little bit too high. I'd like to see more or less 370 around the beginning of February. And if that's true, and nothing super bullish or bearish has happened in the meantime, then we might have a shoulder low on a giant head and shoulder bottom. The long-term bear trend line starting at the beginning of the year would be approximately the neckline, but it should be redrawn slightly flatter, not quite as downward slanted as the long-term bear trend line, which only a few weeks ago we tested and it stopped the rally. It's this blue dot dashed line across here. So I'm leaning slowly in the direction of watching for major bottom formations. Now, I know I've been bearish all year long down to about 320, 340, and I didn't quite get there on October 13th when we had a fantastic bullish Ehrlich reversal signal, the ER signal on October 13th, bullish engulfing and oversold conditions, a whopper, and it did have a 2-month rally after that. And now we have this correction. So I am looking at this as a correction, and I am looking at this as a short-term bottom, and I'm expecting a short-term rally. Short-term meaning, a week, maybe two at the most. Let's go to the DIA, the Dow Jones Industrial ETF, and it's about the same thing. The formation for the last 2 weeks is not quite as defined, but a bit of a sideways trading range. And obviously, I'm expecting to see a bit of strength coming out of this starting very soon, meaning in the next half an hour, or at early part of next week. A downside breakout, making new lows for a couple of months, probably will have modest bearish effects and drop the market down to, say, 310 and maybe a little below 320 to 310 on the DIA. Let's look at the QQQs. What'd I do? I resized the wrong thing here. Sorry about that. And I am losing my resizing icons, which is not good. This does happen sometimes with TradeStation. It's something they haven't fixed completely. So I'm going to pass on the QQQs for the moment. I'm sorry about that. But let's go right to futures. Here we go. I'm going to start with soybean meal, upper left-hand corner. And I'm looking really for red and green bars and possibly yellow. Yellow on a rally means we're overbought, sorry. If it's yellow on a break to the downside, it means we're oversold. Now, in itself, that's not a signal. It's a warning, like a yellow traffic light, that the market's about to turn in the other direction. The actual signal is the green or the red daily bar. Now, we have a new high for the trend. Like I've been saying, the trend is up. No surprise. We're not overbought yet. So I have to expect a little bit more strength. Next chart. Bond futures have been slipping since we had a bearish engulfing and a ER sell signal that didn't work quite correctly, but sometimes they're part of topping out and bottoming out and not necessarily the highest high like that one on August 2nd and the lowest low like that one on June 16th. So I'm slightly bearish on the bond futures for the next week or so. Next. But we did get oversold. Now on the 10-year notes, we also got oversold. So I'm expecting some sideways movement and maybe a little bit of a bounce. And I frankly should have said that in bonds also. So both of them, bonds and 10-year notes, sideways to a little bit of a bounce, but mostly lower in the next few weeks. Not a lot, but a modest amount. Next, gold. Higher slowly. I think this is going to continue for a bit more. No signals at the moment. I do want to point out, of course, that we got the bottom of the market on September 28th. The low ended up being a triple bottom formation, fairly rare. Nevertheless, bottom formation. So I'm friendly on gold. Silver, same comments. Next, cocoa. Told you a couple days ago when we had the bearish engulfing and the red sell signal, the ER red sell signal, that I expected it to start heading south. Yesterday, it came down quite substantially. Today, we have an inside day, no higher than yesterday's high and no lower than yesterday's low, with a little bit higher current quotes. So nothing unusual about that. I'm looking for lower levels on a short-term basis, and that would be cocoa. Next, crude light. We're coming up into a resistance area, and a substantial one at that. We might see a little bit more strength. I don't think so. I'm looking for sideways to lower. The long-term trend here is down since my trading system, which is 100% automated for stocks, futures, forex, sectors, everything. Pick the top of this market way back on June 14th for crude. No significant buy signals since. That's good, I guess. So I'm bearish, modestly so. No fantastic crash. Next, live cattle. Overbought the last 2 days, including today and yesterday, and now I expect to see a little bit more downside correction. I believe that's exactly what I said yesterday. Down to about 156. Yeah, that's about right. And then probably turning back up again. We did catch a major turning point 9/29, September 29th, which is the last ER signal, and it was a bottom, and it's been going up since on the average. That was a good one. Next, natural gas, oversold. Probably too much weakness too fast, and we're going to see a little bit of a rally. I expect it to be up to around 6.20, 6.02, I meant, and maybe a little bit of higher, somewhere in this ballpark area, and then turn down again. And that was natural gas. Next, high-grade copper. Sideways, neutral, nothing happening at the moment. Back in September, had a great buy signal. Next, minor new highs on a longer-term basis for platinum, looking bullish, not super fast. Expect to see a stair-step up bull market on platinum. Next, wheat. Because of the war, we had a huge rally with a series of limit up days in a row, if not opening and locking and staying limit up all day long in the last 2 or 3 days. And then we have an ER sell signal on top of the market. March 8th, a whopper of a sell signal, a great one. Nothing lately except a bit of an oversold condition and a modest slow rally. And we've gotten up to resistance, so I think it's going to turn back down again on wheat. Next, live hogs. Hit a resistance level a couple of days ago. Not quite overbought, though. I expect it to go sideways to a little bit lower. Next, the ES is the stock market S&P 500 futures contract, and that's why it's in this group, because it's a futures contract. And of course, it gave us a buy signal on October 13th. I started talking about the October lows in August, September, yep, at least. And it happened fantastically this year, but you can't turn back the clock and be a buyer on October 13th. Doesn't work that way. So for the moment, I'm looking for this to turn around and start to head back north again, like I talked about on the spider. Next, sugar. Got overbought, has had a downside correction back into some support. I don't think that's a major long-term top. I'm looking for sugar to start to hold and start to turn back up again. Next, coffee. Neutral to bearish. I know we got a good buy signal here in the bottom, but the long-term trend is still down. It didn't turn the long-term trend yet. So I have to be neutral to a little bit bearish on coffee. Next, OJ got overbought a few weeks ago. I talked about it at the time. Neutral on orange juice to slightly friendly. Next, corn. We got a buy signal, fantastic, on the bottom of the break. I talked about it the day that happened. We've seen higher highs frequently since December 7th. And now we got overbought a couple of days ago in a resistance area. So I'm expecting a little bit of a downside retracement. About the best I can say there. 670, another 8 cents or something. Made a new high today and did not hold very well, trading slightly lower than the previous day's close after a new high. That's not necessarily a good sign. Next, soybean oil. I think we started out with bean oil, and we have a bullish engulfing smack on the low here on December 12th, and came up against some resistance and started to turn down. So No, I guess we didn't. So soybeans, neutral to now a little bit bearish because today is the first day it's overbought. It may get overbought another couple of more days and make slight new highs, but generally this is not the area to go long. Generally, you want to look for reasons to go short when you're in overbought conditions. So I'm expecting a minor downside correction. Heating oil, neutral. And here we are with soybean meal. That's where we started. You guys have a great New Year's Eve. Look forward to seeing you on the other side. Profitable trading to you. Stan Ehrlich, Happy New Year.